Hello and welcome to BQ Prime. I'm Ladia. One stock that is in focus in today's session on the back of numbers is Aarti Drugs. Joining us on the show is Adhish Patil, Chief Financial Officer at Aarti Drugs. Welcome to the show, Adhish, and a pleasure to speak to you as always.
Good morning.
Adhish, my first question coming to you, have the numbers met your internal expectations? Because overall, yes, we've seen a growth that has come in on the top line. However, from a margin perspective as well as profitability perspective, we've seen a degrowth that has come in on a year-on-year basis in this quarter.
Yes. So even when we talk about revenues, it is not as per the expectation because though we can observe some growth, but that is mainly because of the rate variance. We haven't seen much of volume growth. The main factor because we have seen a little bit of degrowth in the formulation segment, but that will pick up in next quarter. In the export segment, volume growth was not that good. Main reason was shortage of dollar currency in many of the emerging markets, and their government tenders are not coming out. So that is the reason we saw a little subdued demand as far as exports is concerned for this December quarter. For first half of the year, the demand was very good in exports. Only for the December quarter, we saw a little bit of lack of demand. As far as January is concerned, we are seeing sales are demand is there, but what we feel is apart from antibiotic segment, rest of the other segments are doing well. So we need to wait and watch how antibiotic segment performs in coming quarters. And as far as the margins are concerned, the main reason for the decline in margins for the last quarter was because of the falling trend of raw material prices. And we were carrying a very high inventory at the beginning of the December quarter. So even our finished good inventory was around 37 days in the beginning of the quarter, which has come down to 30 days by December end. And also the raw material inventory was quite high, around 47 odd days in the beginning of the December quarter. And if we see the rates of raw material, if we compare December quarter's purchase and we applied September quarter's rate for this quarter purchase, then it would have costed us around 33 crores more. So we have seen 33 crores of rate means going down for December quarter as compared to September. And with respect to June, it is almost 45 crores. So we can clearly see that there is a sharp decline of raw material prices. And because we were carrying a very high inventory number of days in the beginning of the quarter, definitely it impacted our gross contributions quite a lot. However, we can see that when we compare our monthly sales contract and the purchase contracts which are happening on month-to-month basis, that in that sense we are getting desired gross contribution. So we don't see a challenge in that. But in this changing raw material prices, we are not able to maintain that desired margin. Once it's rises, then I think the margin should come up immediately because order level we are seeing good margins.
Right. So overall, from here on, how are you seeing the fourth quarter pan out? Are you seeing it on similar lines, or there is an improved trajectory that we've already started to witness, specifically from the formulations business and the specialty business, which has seen a degrowth, and places where the margins have been impacted?
Yeah. So the thing is, even December end, we are carrying quite high inventory. The main reason for carrying higher inventory, especially raw material inventory, was because towards the end of December quarter, there was a sudden spike in COVID cases in China. So there was little uncertainty in the market. The prices were going up, and we were not sure whether the supplies will come in. So we had increased our inventory. So December end inventory is also quite high. Though December month prices would be slightly lower than October month. So from that point of view, that won't be a challenge. But if the prices stay stable from here on, then it will definitely the margins will definitely get improved. Even for the March quarter. But slight impact might be there because we are still carrying high inventory as of December end.
Okay. And overall, specifically with regards to your brownfield expansion as well. Now, on the back of the expansion, we've clearly stated that we're planning to double the revenue from the specialty chemicals business over the next 12 months. So, have you already started receiving commitments from customers?
Yes. So the brownfield expansions, whatever we were talking about related to specialty chemicals, they are all means we have already identified customers. We have already spoken with them. We already got commitment with them. Obviously, for some of it, I mean, for some of the contracts, they have told us that first you build the capacity and then we'll sign the uh, commitment contracts. But then they have definitely means we have means advanced negotiations have already been done for those sales.
Right. So, Adish, would you be able to give us as to what percentage of commitment of revenues we've already got from the overall expansion?
Um, I would say almost around 50-70%.
Okay. And moving on from there on, with regards to exports as a business, that is going to be a key focus area for us as well. So, which are the regions where we are going to focus on, number one, and taking into consideration the global market situation currently as well? Are there any tweaks that we are making?
Okay. So as far as formulations are concerned, so they are targeting even Canada now and
Hmm.
Latin American geographies. And also we have certain handpicked means French West Africa, few African countries, and a few Southeast Asian countries. As far as APIs are concerned, we are exporting to almost 100 countries. So, means, except for US, we are trying to tap everywhere. Even
Hmm.
efforts is continuously on. We are getting more and more CEPs approved for many of our API products so that we can sell our product to Europe market. And for the as far as US is concerned, so we have already submitted our final response in September. For the same plant, we got audited by the Australian, sorry, not Australian,
Hmm.
the European agency in October. Australian we already cleared last year for the same plant. So that means we are getting a final nod from means EDQM authorities by February end, and based on that, we will again reach out to US
Hmm.
with this update.
Right. So overall, currently exports is around 37% of our revenues. By how much are we expecting it to grow in the next 2 years, taking into consideration all the capex that we are already incurring in FY23? Because I think 115 is something which has already been incurred, and it's expected to be in the range of 200 to 250 odd crores for full year. So out of which, how much contribution will be through exports? So from 37%, to what levels are we expecting exports to go to?
The export. Yeah. So our formulation business, we are totally concentrating on exports. So entire formulation
Mm.
division, the majority of the expansion is for the export market. I would say almost means incremental sales point of view, almost 80% we will be trying for exports only. But as far as API is concerned, the split will continue to be like that of the historical one, like 40-60 split, 40% being exports and 60% being domestic market.
Okay. And overall, from dermatology or any other divisions, segments that we're looking to enter?
Yes. So dermatology, our plant should be commissioned by the end of first quarter of the upcoming
Mm.
financial year, and then the SpecChem greenfield project will be completed in Gujarat by the first half of the next financial year. That will be around September month or something.
Right. And overall, will our growth levels be similar to what we've seen in the past, or do you see some bit of, a degrowth in terms of growth in FY23, taking into consideration the way Q3 numbers have panned out?
I missed the last part of it.
Yeah, I'm saying, what's the kind of growth that we're looking at in terms of FY23? Will it be similar levels to what we've seen in the past, or will there be some bit of a negative impact because of the Q3 numbers?
So overall, it won't affect much for FY23. But as far as FY24 is concerned, definitely we'll be eyeing double-digit volume growth. But as far as value growth is concerned for the upcoming financial year, it might suffer a little bit because of lower API prices as compared to the current year. But majorly our profits are driven by the volume growth. So that way, we are not much concerned.
Right. And in terms of FY24 onwards as well, what's the kind of capex that we're looking at? Because clearly starting from FY22, we were looking at our 600 crore capex over the next 4 to 5 years. So around 250 crores is what we're already spending in FY23. Will the remainder be for the next 2 to 3 years, or will there be an additional capex to over and above the 600 crores that we had already planned?
So next year we'll completing whatever residual amount is spending from the 600 crore capex. Apart from that, apart from those greenfield projects, we do plan to spend around 50-60 crores, for the incremental capex, because we do a lot of brownfield expansions. In Spec Chem also it is going on. We did it for antifungal antibiotic product as well. So all this, and also the maintenance capex. So all this will be funded in that budget of around 50 to 60 crores per annum.
Right. And overall, if you see from a ROCE and a ROE perspective, right? FY21 specifically, we did see a really strong year. ROCs of around 35 to 36%, ROE of around 34.2%. And we've again come back to a dip to levels of FY20. By when do you expect to see these kind of numbers yet again?
Yeah, so FY21 was it was a COVID year, 2020. So that was an outlier, but definitely we want to achieve ROC upwards of 20% very soon. This year, obviously, because of the first 3 quarters on an annual basis, it won't be possible. But we definitely hope that if the situation stabilizes in this 4th quarter, in the current quarter, then the upcoming financial year should be good. So we should start reaching towards our target very soon from the next financial year onwards. Also, that greenfield project, they will be available only for, say, half of the year for next year. But then the true potential of those greenfield projects will also be seen in FY25, the next financial year.
Right. All right, Adhish. Thank you so much for speaking to us at BQ Prime and for that candid conversation. Good luck for the coming quarters as well, and speak to you soon again.
Thank you. See you soon. Bye.